Good morning, everybody. This is Nick Santiago from In the Money Stocks. Today I'm going to try and execute an S&P 500 E-mini trade for everybody. We're going to watch price come down to around the 1575, 1675.80 area, 1675.75 level. It'll be right around here, and this is where we're going to look to get into an S&P 500 E-mini trade. So again, we'll go long the S&P 500 E-minis if it gets down here. If it doesn't, then so be it. There'll be no trade at the moment. Volume is very, very light today, so there's a chance price doesn't get down there. That's always the case sometimes, but nonetheless, if it gets down here, this is an attractive level where I think we could scalp out a couple of points on a couple of contracts. We're not looking to trade the E-mini in a big way. One thing I will tell traders is that a lot of traders that come to us at In the Money Stocks are undercapitalized, and a good way to get your feet wet in the market is really to trade the S&P 500 E-mini futures. One reason is because it's a leverage product, and you can usually open an account with about $5,000 as opposed to opening a day trading account where you need about $25,000 to $30,000. So if you want to day trade, basically $5,000 will most brokers will allow you to trade a few contracts, and really every point in the S&P 500 E-mini futures is worth $50. So just say, for instance, we go down here and we bounce about 2 points to 1678 from 1676 on two contracts. That would be roughly $200. So every contract, 1 point is $50. So if you get 2 points, you'll get $100. You have two contracts, that would be worth $200. Most brokers will also put in a safety valve for you, meaning if the trade goes against you, it would automatically stop you out at a certain point, and that's always good to have as well, especially if you're a new trader. You never want to take on too much risk. So there are a lot of benefits to trading the S&P 500 E-minis. The negative of it is if you over leverage yourself or you take too big of a position and you're really not capitalized for that kind of position, you can get yourself severely hurt, and that comes with just trading in general. Doesn't matter if you're an investor, a swing trader, or a scalp trader. Anytime you become overly aggressive and you're undercapitalized, that's always problematic. So just a quick note on the S&P 500 E-mini futures. So we're going to see if S&P 500 E-mini futures get down to this 1676 level. That's where we would look to execute just a quick bounce trade. So that should be a decent level right at this black line, and we'll go ahead and take just two contracts. I just want to show you how a small amount of risk can still make you a decent amount of money. You could probably open an account that allows you to trade 2, 3, 4, 5 contracts with probably $5,000 or less, and still come out each and every day. Hopefully, if you know what you're doing and you're educated in trading, you can make some decent money. So this should get down here. It might just take a few minutes, but sometimes that's just the way the market is. It just takes its time. I think I've only been talking now for about 3.5 minutes, so not a big deal. This should get down to this level here, and that's where we will look for a bounce in the S&P 500 E-mini futures. Okay. Price is taking its time to get down there, so we'll just see how this plays out, but I do expect a move down into that level. That should be a pretty decent area overall. Depending on how we hit into this level, we'll probably look for about a 2-point bounce, maybe a little more or a little less, given the pattern that presents itself. We never know what kind of pattern we get. All we're looking at right now is just a support level that ultimately looks pretty decent to us. Market again ticking up a little bit, and like I said before, it's a little bit of a slower trading day. It's definitely on the quieter side. Just 16 million shares traded. It's 10:17 a.m. So you can see that the volume trends today are very, very light, and that will sometimes help keep the markets buoyant. But I'm expecting at least a move down to this level, and hopefully we'll capture a play for a quick bounce. We're not looking to get married to the S&P here or look for a 10-point move. The pattern that's on the charts just is not suggesting that. Sometimes you will look for bigger bounces depending on the setup. But right now, the setup I'm looking for is just a decline into this level, and then with the light volume, we should get some kind of a bounce. So we'll see if that does happen. Again, really just need a break of this low right here on a 10-minute close. We should get down there. I know it's taken a while, but patience is what makes money in the market, not forcing trades, not gambling. A lot of people will compare traders to gamblers. I like to compare traders, professional day traders, to Steve Wynn. Steve Wynn knows the longer somebody stays at his casino, the more likely he is going to take their money. We like to think the more often that we trade the right chart setup, the more often we are going to make money. So again, we want to have the odds always in our favor, not have the odds against us. What I notice about a lot of new traders and amateur traders is that they're looking for action, they're looking to gamble, they're looking for that thrill. That is completely the opposite of what you want to have. Personally, I'm petrified to be into a trade. I only want to trade if it tells me I'm going to make money on the position. So that's the way I like to view the markets. That's the way I trade the markets. Even if I'm wrong and I do lose on trades, and everybody will lose, I know that I have a stop out and I'm going to lose small. But the key to everything is to have the odds in your favor. Generally, as traders, we are odds makers, and we always want to take the best odds. So a lot of people may say, well, Nick, how come you just don't short the market right down here if you think it's going there? Well, the odds are not in my favor that there won't be a bounce first that can take out my stop, and the market is already down quite a bit. But if the market gets down to this level, this is where I like to see a bounce in the market. So that's kind of the reasoning, and I think that's one of the biggest mistakes that a lot of people make, especially a lot of new traders or people new to the business. They constantly want market action, and they don't want to take the best risk reward setup. So patience pays. If you're not patient, you will pay the market, and the market has no problem, has no prejudice. It will take your money, and that's just the way it works. So again, as we're watching this fall a little bit more, we're going to watch this get down into that 1676 level, or just a pierce of 1676, and that's where we're going to look to get long just 2 contracts. We'll just do 2 contracts, and we'll look for our bounce at that level. Again, we'll show you how we do money management and how you want to play this market, but essentially so far market looks like it's starting to play out what we think is going to happen. So again, trading is it's not an easy profession. It takes a lot of practice, a lot of time, a lot of dedication, and that's just something that we find that most people are not willing to commit to. So we'll see if price gets into our level. I think it should. The way that the market is coming down, price should get down into that support area. For those of you trading the spiders, you're going to look for the 168.15 level, and a lot of times in our chat room we'll trade right off the spider chart, even if you're trading E-mini futures. So that would be around this 168.15 level. This would be the bounce level for the spiders as well. Just make sure I draw that line, and it's right there. There we go. So if you're trading the spiders, that would be the level. If you're trading the E-mini futures like I do, we're going to look at the 165.75 level. This light volume just doesn't want to let that market go yet. So you can see how light the volume is, but so far today on the spiders, and that's a good judge right now, about 18 million shares. It's a real light volume day, but nonetheless, that increases the odds of our level. when it gets there, if the level is sufficient. So we just have to bide our time here and just let it fall into our level, and that's where we'll look to get involved. The later we get into the day, into the session, the better it favors the upside for us. So again, it's all about finding the correct spot, the correct level where the institutions will come in and support an equity. And that's what it's all about, and that's really what we teach here at In the Money Stocks. We can't move markets. I can't move markets. But the large institutions, the Goldman Sachs of the world, the JP Morgans, the Merrill Lynch's, the Jeffries, they can move markets. So that's what we want to do. Just find the support line where the markets will be supported. Where will the institutions get involved? Where will they look to rescue an equity? Where will they think there's value in that equity? And that's what trading's about. Again, as an independent trader, an individual trader, we should never look to think that we're going to move a market. I can't move Apple, yet I traded it this morning for a move over 4 points in about 3 minutes, and simply because I knew the support line. I knew where the institutions would come in and support that equity. So this is what trading's all about. It's not about guessing. It's not about gambling. It's not about looking for action. I don't want any action unless I have the odds in my favor that I can make money, and that's something most traders struggle with, as I alluded to before. We'll see if this could get down to that 1676, 1675, 75 level. We'll see if it could get there. That's where we will be looking to execute 2 contracts on the S&P 500 E-minis. Okay, already you can see just every candle has some pretty wide range action. If you just go back and look even at this bar, the high is 1682.75, the low is 1679.75. So again, that's about 3-point range in each bar. So for us to get our level and capture 2 points, that bodes well if our level is correct, and that's what all we're looking to do. Capture 2 points, and hopefully on 2 contracts we make a little bit of money there. And that's really the idea behind trading in general. As a day trader, we really don't concern ourselves too much with the overnight action or even the bigger action. We just want to make sure that we have a level that is sufficient to give us a bounce, and that's the beauty of day trading. You go to sleep every night without worrying about the overnight volatility and the overnight action, as your positions are closed out each and every day. So that's something that I think traders like myself enjoy. I do trade and hold some positions overnight on a swing basis, but again, day trading, when you do day trade, you don't really have to worry about the overnight, what happens overnight, any geopolitical events, and that's kind of nice to be able to go to sleep each and every day without worrying, for those of you that are worrywarts. Spiders are now coming down into that level. Still got a little bit more to go, but you can see the market's working its way down towards that area. Today is September 11, 2013. It is now 10:29 a.m. in the morning, so we will begin a new candle since this is a 10-minute chart. And again, if we look at a 5-minute chart, you could use that as well. Some people like to use a 5-minute chart as well. We would look for more downside, a little bit more downside, but the level remains the same. There's nothing that changes. Just got a little bit more to go. One more drive down there. Should see that level hit. Little bounce coming in. Couple of ticks. Each tick in the market is 25 cents. So you're going to see how price here trades from 50 to 75, back up to 16.79. each 25-cent increment is what we call in the business a tick. So 4 ticks make a point, and we're looking for this thing to move down to E-mini future to move down to around the 1676 level. So we'll see if it gets there. Those of you that are listening to this video, we are exactly 19, almost 19 and a half minutes into this video. So you can see it's just a stalking game already. That's really what it comes down to. Nothing more than that. So we'll just wait and see how it acts when it gets into that level. So as I'm watching the E-mini right now, I'm also watching a few stocks as well. One stock that is on my radar is Qualcomm, and I'm going to look to pick Qualcomm up at 67.50. So this is on my radar right now. If Qualcomm can get down to 67.50, I'll be a buyer there. It's only about 20 cents away. So we got dual trades going on here. Potential trades, I should say. Neither one of them have triggered. But we're going to look for Qualcomm on one end of it at 67.49. We'll also look at the S&P 500 E-mini futures right here. Well, this one's bouncing, so this is getting a pretty good little bid. But we'll see if this can get down to 1676. I do want it there still. What I don't want to see is consolidation above the level. But as long as we come down into that level, I will be looking to pick up the S&P 500 E-mini futures at that spot. But right now I'm going to eye Qualcomm as well, since that could be in play at 67.50. I'm only going to look for 25-cent bounce. It's not all that much. Maybe a little bit more. I'm going to risk about 25 to 30 cents on the trade as well. A pretty good sell side action for Qualcomm. Right around 67.50, I'll look to pick that up. E-mini futures, we're looking at 1676. That's not there right now. E-minis have just gotten a big bounce. But as a trader, you got to be flexible. You got to go where the support bounces are. And right now, I'm going to watch this Qualcomm come over to this 67.50 level. That's going to be my entry. Should get there. Should get there just in a few moments. The E-minis are being supported right now, so we'll look at them as they get closer. I'm watching them on my other screens. Just about 15 cents away from the Qualcomm entry target, so we're going to look for that today. This is a pretty sizable gap down on Qualcomm today, so very, very good gap down on Qualcomm, and we're going to watch and see how that looks when it gets into that 67.50 area. But pretty good sell-off today. Qualcomm down $2.45 on the session. Most people wouldn't want this equity, but we want it. We'll take it there. I like to think of being a trader as being a good Samaritan. When somebody doesn't want something and they continue to sell it, we want to take it off their hands and help them out. So we'll take it off their hands at around 67.50. And when somebody loves something so much and they have to have it, and something's so high on the charts, we're going to give it to them. We're going to let them have it. So always think of yourself as a trader as a really good person, a good Samaritan, so to speak. So right now traders do not want Qualcomm, so we're going to take it off their hands at 67.50. They're in a lot of pain. It should get down there. We're going to look for a bounce at that level, generally around 20 cents. 25 cents, excuse me, 25 cents. Maybe a little bit more. A pretty good sell-off on Qualcomm. Just a few cents away from our entry here. Little bit lower. Little bit lower. Okay, there goes Qualcomm. So now we're going to look for the bounce in Qualcomm here. So we are in Qualcomm at 67.51. We'll look for a move back up to 75. Starting to see a little bit of a bounce come in here, just a small one. We'll see if Qualcomm can make its move here. It's a little bit slow on the slower side. See Qualcomm now moving higher. There we go. See if this one can move higher again. So again, anybody in Qualcomm now can always take a little bit off the table. You're up about, well, we're up about 10 cents. We'll see where this goes now. But they could protect it with a break-even stop if you want to be a little bit more cautious. But you can see here how the level right now is being defended. It just comes out down to, will the institutions push this now? They are starting to defend it already. Alright, there goes a bounce right there. Some traders could take a little bit off the table.
Order filled.
I just took a little bit half profit off the table. Alright, just to lock in some gains. That's just the reasoning, because it's just a weak market in the equity. And now the stop is moved to break even. So locked in half profit. We're going to let the rest go higher. Look for ultimately 30 cents. I think we get 30 cents out of this today. So let this go a little bit higher. There we go. So just to lock in some gains, you move your stop to break even now, and just let the rest play out. That's all it really comes down to. Okay. In fact, this may be a dead low for the stock. So there we go. Now you're looking at about roughly almost a little over 20 cents. We're going to let it go higher. I think this can go 30 cents. I think this could go higher. We may have nailed a low on this stock today. So, you know, traders, I'm going to hold second half. I'm just going to leave it there. But I took a little profit for 13 cents on 500 shares. I'm going to let the rest run. I'm going to leave this video here alone. We'll see. Let's get a little bit up. But, you know, it's been a long video. But you could see here today how I was stalking the E-mini futures, and it just never got down to my level. But on the other screens, I'm looking at Qualcomm, which is a level I gave out to the trading room, and I said, you know, we're going to look to buy this here at this level. This is where the institutions will come in to support it. Again, we want to be a good Samaritan. When somebody don't want something, we want it. And so far, turning out pretty nice. Basically, a nice little bounce, and I think we may have pegged the low there. But either way, traders are going to have a break-even stop in there. I'm going to leave it here now. I'm going to turn this video off just because it's been running about 35 minutes. I don't think anybody's going to want to watch a video worth 35 minutes. But that's how day trading works. So if you want to come over and test it, come on over to In the Money Stocks, and you'll see exactly what we do each and every day. With that said, everybody, have a great trading day, and I'll see you on the charts, and we'll see Qualcomm a little bit higher later. Take care now.